Hello and welcome to Echo45 Advisors Market and Economic Update. In this video, we'll discuss the current budget battle in Washington and what it means for investors. This debate is occurring alongside other political events, such as this year's presidential election, the Republican caucuses, which are already underway, agreements on tax policy, the debt ceiling, and more. In general, it's important for investors to distinguish between how politics affect us as voters and taxpayers versus how we should react as investors. First, this chart shows the level of federal debt compared to the size of the economy. It's easy to see that this ratio has risen significantly in the past 20 years. Today, the federal debt stands at 120% of GDP. Even after adjusting for what the government owes itself, such as when government agencies buy Treasury securities, this number is still 95%. The debt grows because the government operates with a deficit. This simply means that the government spends hundreds of billions more than it takes in via tax revenues. Not surprisingly, the level of debt and deficit is a central issue in Congress agreeing on a new budget. Second, the government needs to borrow money to pay for the deficit, which it does so by issuing Treasury securities. This chart shows the issuance of these securities has grown and that they are held by both domestic and foreign entities. It's important to distinguish the current budget battle from the debt ceiling limit. The debt ceiling requires Congress to raise the amount that the Treasury can borrow periodically. This occurred last year and will happen again in early 2025. The debt limit and the budget battle are intertwined because they are both related to government spending and borrowing. Whereas failing to agree on the budget results in a government shutdown, not raising the debt limit threatens a default on the government debt. Both would be terrible outcomes for financial markets as well as everyday investors. Finally, the gap between spending and revenues can only be closed with lower spending or higher taxes. This chart shows that the current tax rates are actually quite low by historical standards. Thus, it's important to keep this in mind when crafting financial plans. Perhaps the most important thing investors need to keep in mind is that the stock market has performed well over the past 2 decades, despite these problems in Washington. In fact, if investors that had focused too much on the level of debt, they would have likely missed out on much of the past 2 bull market cycles. So rather than worry about day-to-day Washington headlines, it's more important to stick to a financial plan that considers the impact of taxes and long-term market trends. We hope you found these insights helpful. If you have any questions on these topics or anything else, please give us a call. We look forward to speaking with you soon.